Give us an idea of what you do and what differentiates you from others.
Yeah, thanks, Rishaad, for having me on this. We started Zerodha in 2010. I used to be a trader, in my previous avatar. So what we were trying to do when we started the business was reduce brokerage costs. So India was working on a percentage brokerage model till then. So we launched a flat fee per trade model, 20 rupees or say 30 cents per trade types. In 2015, we launched, so we started the first 3 or 4 years was on top of vendor products. In 2015, we launched our in-house products, and we also went zero brokerage for equity investing. Only speculators pay the 30 cents per trade, and all the equity investors get to invest for free. The products that we launched in 2015 took off well. People liked it. And around the same time in India, you had this Aadhaar, because until 2016 in India, if you want to open a trading account, you had to sign like a 40-page document. So it was quite painful. And then we had this Aadhaar, which allowed people to onboard customers completely online and digitally. So that's when really when the business started taking off, because onboarding became easy. So we were at around 70, 80,000 customers in 2016. We are at around 5 million customers today. We launched Varsity. Sorry. So yeah. So
I just want to get to how the business has been doing with the pandemic. I mean, we saw what happened with Robinhood and how that's grown parabolically, you could say. How about you guys?
Yeah, absolutely. So last Jan, we were at around 2 million customers. We are at around 5 million customers today. So yeah, it's been quite a crazy last 12, 13 months, because if someone had asked me, in 2020 Feb, saying, somehow we'll have a lockdown and you will grow as a business, I would have said, dude, what are you smoking? So it's quite crazy that we've actually grown quite a bit on a largish base as such. So.
Okay, I mean, it's retail here, isn't it? I mean, that's what you have at the moment. And, they are also finding ways to get into IPO markets in India. But some have said they look a bit frothy. What's the sort of word of caution you give to novice investors now?
Yeah, see, the thing is, I think, if you were to compare, say, India to the US, I think one of the positives in Indian markets right now is that most retail investors who are getting in are not really speculating using options and all of that, right? As in most people are coming and investing into stocks. And the behavior that we have seen is that most of them are investing in the top 100, top 200 stocks, large cap and maybe, like a little bit of mid cap, but mostly it is in the top 200 stocks, right? Which kind of, and also this time around, what the regulators in India have done as compared to 2007 is they've made things like margin funding, etc., very tough. So most people who are coming in and investing, they're not even getting any leverage, so they are essentially doing by paying full money upfront. So while it is, it kind of maybe is frothy in terms of where the indices are, be it any market in the world. I don't think in terms of participation or in terms of leverages or in terms of the products that are being traded are really frothy as such, right? But that said, we run a really large education initiative called Varsity, maybe the top 2-3 in the world. So we are constantly trying to educate our customers towards not doing mistakes like going against a trend or kind of getting concentrated into a few stocks and all of that. And we're also leveraging technology here. So what our trading platform does is that when people are doing these basic fundamental trading mistakes, we kind of nudge them away from making those mistakes. Yeah. So which has kind of played out well for us.
Nithin, we saw that very big technical outage on the NSE last month, and it affected your trade as well. In fact, there was a lot of social dissidence about the fact that you forcefully squared off some of the positions. What do you think went wrong there, and how can this be avoided in the future?
Yeah, I mean, see, the thing is, in today's world, we rely so much on tech, and there is no way no one can claim that they won't be down, right? As in every exchange in the world was down. I think what happened on that day, I think what could have been done better is probably communicate to brokers well. But I can also imagine the pressure the exchange would have been in, because I'm sure they were trying to figure out what's the issue or have it fixed soon. So maybe the communication didn't happen correctly. Because if we knew that the markets are going to be extended, we wouldn't have, kind of squared off those intraday positions just, I mean, we squared it off at our normal times. And I mean, we usually square off all intraday positions around 315. And we did it at 315 on that day, but instead of NSE, we did it on BSE. Now, what happened, unfortunately, that day was because NSE was down, most very active institutions or traders were kind of not trading as much. So the BSE was a lot more shallower in terms of participation. And because of us squaring off, not just us, I mean, almost every other broker did that same. There was a lot of impact cost for people who had intraday positions on that day. And for most customers, we are facing, customer facing. So they usually, if they get an opportunity to rant, so they'll first try to blame us, the brokers, before actually blaming the exchange for this. So.
Nit and Rish said at the top there that you're kind of known as India's Robin Hood, and Robin Hood certainly came to the fore with the GameStop phenomenon. Does the meme stock, I guess, phenomenon play out in India? Can it?
No, not really. I mean, I think the regulator in India has done a great job here. So, in India, you can't really short stocks. I mean, the only way to really short stocks is through futures and options, and futures and options are allowed only in the top 100, 150 stocks, right? So you can't really go short any stock you want on the, any stock you want. So which means that kind of short squeeze can't really happen on random stocks. Right. Also, India doesn't really have, while the markets, right now the participation has increased, but retail is still a very small piece of the overall market in India, right? So, 30 to 40% of the exchange turnover comes from retail, and retail, and we don't really have a Reddit or even the Twitter community in India. It's not really, there's no concentrated activity that can potentially move stocks around. So, so I don't see something like that happening in India.